I'm Samantha Rowan, the Managing Editor of Real Estate Finance and Investment, and this is REFItv. Today we're here with Jon Winick, the President of Clark Street Capital. Thanks very much for being here, Jon.
Samantha, thanks for having me.
Great. Tell me a little bit about Clark Street Capital. What are your primary areas of business?
Sure. Clark Street Capital is an asset manager and advisory firm focusing on commercial real estate mortgages. We specialize in small balance commercial mortgages and SBA loans. We have two main businesses, a specialty debt fund and an advisory business, the Bank Asset Network.
How is what you're doing being affected by the current liquidity crunch in the commercial real estate market?
Sure. We formed this company in response to the problems we saw in the credit markets. We believe there's going to be a significant shuffling of the deck as some older, more irresponsible players retreat from the market and newer, more nimbler entities increase their market share. We think despite all the government bailouts, the forces of creative destruction ultimately will prevail.
So there have been a lot of government bailouts. So there's been TALF, there was PPIP. A lot of these are supposed to stimulate banks cleaning up their balance sheet and selling loans, but that so far hasn't happened. Why have banks been holding their loans on their balance sheets?
Let me address the regulatory perspective first before I get into that. Right now, it's a very difficult line the regulators are walking. Certainly, they would love it if they could wave a magic wand and get these problem assets off banks' balance sheets. The problem has always been price. And the banks need to raise capital in a lot of cases. They need to make more money off of their performing assets. And right now, it's a great time to have performing assets because the spreads are terrific. And finally, they need to increase their loan loss reserves. Very few banks are at the 2.25% of assets that the FDIC is privately recommending they need to be. I believe this process will be a 2 to 4 year gradual process rather than a fire sale. And I think eventually, as banks raise capital, write down assets, there'll be more asset sales.
How does the Bank Asset Network fit into this?
Sure. The Bank Asset Network was formed for us to leverage our bank relationships and really go to a bank and provide a full-service solution to their entire portfolio of U.S. real estate assets. We felt that the other platforms out there were not offering very good execution, and the feedback has been very powerful. We've created a customized database of buyers. Buyers register for the Bank Asset Network. They outline their acquisition preferences, including the types of loans they want to buy, the markets they want to play in, and about 8 other factors. And then we'll then go to our banks and then create a customized sales process for them to dispose of assets through the network.
Well, that's a very, very, very customized approach. What's the early response been from your participants?
The response, I won't say we were overwhelmed by the response, but it has far exceeded our expectations. I did not conceive of the opportunity until we launched it. I didn't conceive how large the opportunity was. We're finding, from the buyer perspective, the buyers are looking for transparency, total transparency. The sellers are looking for complete confidentiality. From talking to the leading buyers and sellers, the current FDIC-style sales process has been very effective. Essentially, you get very little transparency. In a lot of cases, the folks marketing the assets don't really understand these assets on an individual level. Our strength is we understand these assets on an individual level. What will typically happen is when we engage a bank, we'll go out to the bank, we'll go through their portfolio, and then we'll market the assets. We'll put the assets in a position for sale.
And then what are the different options that a bank has that does want to sell assets?
Sure. We're not going to impose a sales process on the banks. We do have a best practice sales process, which we will recommend. We're finding that confidentiality is often breached through too public of a sales process. We've heard anecdotally on numerous occasions, borrowers are finding out that their loans are for sale. They then stop paying on their loans in order to reduce the value of the asset, so the new buyer pays a lower basis and is more willing to give them a more attractive payoff figure. It's a total moral hazard. And we're finding that the other platforms out there, in a lot of cases, they're marketed by traders. I mean, we're bankers, real estate people, not traders.
Great. And also, what kinds of loans are you guys seeing? Are these balance sheet loans? Are these securitized loans? Are these performing loans, non-performing loans? Are they a mix of everything?
Sure. I would say that what we're finding in this marketplace is the types of assets that banks are looking to sell were typically assets that were never originated for sale. Many of the other platforms were originated in a world that doesn't exist anymore. Mm-hmm. They were taking whole loans that were intended to be securitized assets and that were kicked out of a securitization pool. And they were marketing whole loans that were originated originally with the intent to sell. When we go to these banks, a lot of cases the banks don't know what they have, where it's worth. The banks don't know what they have, where it is, and what it's worth. And we'll go and we'll market those whole loans and those types of assets for them.
As the bid-ask spread narrows between buyers and sellers, do you anticipate growth in the number of banks and other participants that are involved in the bank asset network?
Absolutely. I mean, we think this is a tool to help narrow the bid-ask spread by providing custom-tailored transactions for buyers. We're finding that from talking to sellers out there, a lot of the regional banks are actually hiring people to directly market assets. Mm-hmm. One of my good friends went to one of the largest Midwest regional banks, and they found that they'd used some of the other FDIC-style platforms. They weren't happy with the execution. And they're telling me, we get better execution through private sales. We preserve our confidentiality. And the buyers like it because they feel special. And they're not spending $300,000 in due diligence for some assets that they have no certainty that they're even going to be competitive on.
Sure. That's all the time we have for today, Jon. Thank you for being here and just telling us about the Bank Asset Network and what you guys are doing.
I appreciate it. Thank you for having me.
Now, where do people go to find out more about Clark Street Capital and the Bank Asset Network?
We have a website, www.clarkstcapital, and the Bank Asset Network is its own website. To find the BAN, go to www.bankassetnetwork.com.
Great, thank you.
Thank you.
For more information on real estate finance and investment, go to www.iirealestate.com. Thanks for watching today, and I'm Samantha Rowan, and this is REFItv.